everyone, and welcome to a demonstration of our SparcHub software system. I'm Rita McGrath, and joining me is our team member, Jagora Kaiser, who is our customer success lead and will be one of the people you'll be dealing with should you decide to join this community. So hello, everyone. And I thought I'd start with a little bit of the theory of the case. And then we'll do an actual live demonstration of the SparcHub system. So we're here with an introduction to the SparcHub system. And as I said, we're going to do just a little bit of having a look at why we think this is valuable and important, because I do think it is. So the fundamental struggle that we see when we're trying to promote an innovation process in our organizations is that there's this tension between the new little businesses, which by definition are tiny, they're unproven, they're uncertain, they're like our little mouse sitting up at the corner of our screen there, and our big ongoing businesses, which have a lot of durability to them and they've got a lot of power, and the one can really outweigh the other. So what we want to try to do is create more of a balance between the future and the present. So it's this idea of a balance between value today and value tomorrow that we're really trying to promote. The first observation I would make is that there's a real missing piece in how we think about value creation as leaders. So if you think about a low uncertainty situation, you're selling something that's pretty predictable. You pretty much can guess how much next year is going to bring you. It doesn't change a lot year on year, a slower moving setting. A lot of our conventional tools for management work just great. Things like management by exception, calculating return on investments, doing very detailed planning for the next 18 months of deliveries, those kinds of things. They work very well. As we push up in uncertainty, in other words, as your business becomes less predictable, or it's a new business, or it's a business that's going through transformation, more and more of the value that we're creating consists of what I call option value, where option value represents the right to make some kind of choice in the future. And option value is a very intuitive concept. The fact that you're here at all represents option value. You don't know exactly what you're going to get out of this little webinar, but it might be interesting. It might be valuable. Let's pop in and see what's to be learned. And so it's the right, but not the obligation, to make some kind of future choice. And that's what option value buys us. You can think of it in terms of the relationship between the upside of a potential business and the cost that it costs you to get there. If it costs you just a little bit and the upside is huge, well, that's a bet worth taking, right? So very intuitive idea. But often we sort of forget that when we're trying to do planning and resource allocation in a business. So the idea of option value shapes what your optimal portfolio should look like. What does it look like across levels of uncertainty? So the way I think about this is you map it out with uncertainty about markets across the bottom. So that's uncertainty about who's going to buy it? How will we get to them? Is my company supporting my efforts? And up the side, we have uncertainty about technologies or capabilities. Can we do this? Will it scale? What's the standard going to be? That kind of thing. And each of these levels of uncertainty suggest the task that different kinds of projects have to do for you as you are thinking about planning for resource allocation. So the first kind of project is your core business. And clearly, that's the most important of all, because if you don't get that right, you don't have the resources to do anything else. And it can be very innovative, taking your infrastructure and not moving it to the cloud, operating a subscription business out of something that used to be a product business. These are all innovative things, but you know how to do them and you know who you're doing them for. So they're the lowest uncertainty of our different spaces. As you move up a level of uncertainty, you're now in the world of what I call new platforms. And these are often fairly substantial moves into highly uncertain territory. So when Adobe, for example, completely replatformed its business and went into subscription-only software, that was a big, bold move into totally changing what they offered as their core business. Now, these new platforms are not to be taken under lightly because they're often requiring a big commitment. And you need to be able to fund them appropriately, or you basically doom them by under-resourcing them as you go forward. Now, once you get beyond high uncertainty on either dimension, now you're in the world of options. So the first kind of option is what I call a positioning option. And this is a case where I know that there's some kind of demand. What I don't know is what the solution is going to be to meet that demand. So as an example, what comes after Zoom? I don't know. You don't know. It could be holography. It could be movable screens. It could be, I don't know, some sort of haptic AI-enabled wizard system, but we don't know. So if you're smart and your business depends on being in the telepresence kind of space, you want to take out options, small investments, potentially in a startup. Maybe it's an R&D project, maybe it's a small exploratory foray, but they're small. And you know that most of them are not going to work out in the market. They're not all going to be the next Zoom, right? So your job is to create a number of them so that you're covering more of a range of the possibilities. So that's the idea with the positioning option. You have a different approach with what I call a scouting option. Now, a scouting option is a case where I have some kind of capability or technology or something, and I want to take it to a new place. So I want to take it to a new market or a new product, or I'm introducing it into a new kind of customer. And there, what you want to do is a lot of experimentation. The last kind of option is what I call a stepping stone option. And a stepping stone is a case where I think the opportunity is enormous, but I don't know how to do it, and I don't know exactly if anybody will buy it. And many of our most promising new technologies and markets have that kind of flavor to them. So you think about autonomous vehicles, for example. We're rushing around with excitement about autonomous vehicles. It's just going to be great. But as of this point, it's still pretty underdeveloped technology. So what do? I would argue you find yourself a stepping stone, which is a small market which can use your solution in its current state of development to do something useful. So in autonomous vehicles, we actually have an example of the military, which uses autonomous follow the leader supply trucks to follow a truck driven by two human beings into dangerous zones to supply their frontline troops. Perfect stepping stone, right? It's a controlled area, the customer is willing to pay, solves a real problem, and that's all really great. So this is the nature of what each of these kinds of projects has to do for you within the context of your portfolio. So the obvious question, right, is what kind of a mix of different kinds of programs do I need across different levels of uncertainty? And there's a textbook answer, and then there's reality. So the question is, what should your ideal allocation of resources be? And the ideal one is you probably want about 70% dedicated to the core. So that's going to take up quite a bit of your existing resource allocation, but not everything. You probably want about 20% dedicated to new platforms and maybe 10% invested against your option space. Now, what becomes interesting is this has actually been researched by people who were at Monitor and McKinsey. And what they find is for every dollar or euro or peso that you put into an option, you get 70% return back. And for the same money that you put into platforms, you get 20%. And the same money that you put into the core, 10%. And the reason this happens is because of something very fundamental. Your core business, by definition, has less uncertainty in it. So you've decoded it. What that means is competitors are likely to be copying it. What that then means is every incremental bit of resource that you put into your core business is subject to diminishing returns. You're just not going to get back the same payback. Whereas your options, right, have that much bigger addressable growth area. And so I think this is something very important to remember. This is your ideal outgo, right, mix, but your likely returns are going to be balanced across the more uncertain, but potentially more profitable options space than what you might have right now. Now, all too often, if your ideal mix is 70-20-10, all too often, this is what you get, right? It's some random collection of projects of various stages where you got way too many, in this particular hypothetical portfolio, way too many platforms, probably not enough options, and a lot of stuff kind of hanging out in the core that's not really delivering to results. This would be a very out of balance portfolio. Now, you have to ask yourself, why does this happen? And I think it happens because there's these four processes in organizations that tend to come kind of unglued from each other. The first process is the process by which strategy gets made. And when it's done right, strategy is pulling you into the future. It's saying, this is our point of view. Here are the choices that we're making today that we think will pay off in the future. Budgets, on the other hand, are often run on a different time scale. They're often run in a way that, where does next year's budget start? It starts with last year's budget. And so budgets are often anchoring you in the past, even as strategies trying to pull you into the future. Then we have the project governance process. And all too often, when you kind of really look at what's going on in a typical large organization, it's a mess. It's like that last picture I just showed you. You got somebody's pet bunny in there from 2 CEOs ago, and nobody's asking the question, why are we still doing this? Or you've got mission critical, absolutely customer centric programs that have, half an intern working on them. It's just not transparent. And it's often subject to all kinds of politics and so forth. So you have strategy disconnected from budgets, disconnected from projects. And lastly, you have the process by which people feel that they're going to get ahead. And over the many years that I've been studying this problem, because it's a problem I see over and over and over again, one of the things that people have said to me many times is, it's the problem is it's just not transparent, right? The strategy is not clear to the people that need to execute against it. The budgets are all tied up in some process that's very heavy and rigid. The projects get allocated by a different group of people, and that happens almost haphazardly. And our reward and incentive system is left over from 3 strategies ago. There's just no transparency to how we bring all this together. So, you do. Okay, so what you see here is the SparcHub portal. As I showed you in the slide demonstration before, this is now a populated opportunity matrix. Each of these bubbles is a project. The green ones are projects that are internal. So these might be things like overhauling your payroll system, or as Jim and I were just talking about, it might be a major change program that you're trying to do that you've got to invest some energy in. So they're internally facing. And the golden ones are externally facing. And the reason for that is that they often draw on similar resources. So we want to make sure we're kind of keeping track of them. The portfolio layout here is based on the answer to a series of uncertainty questions having to do with each project. And I'll show you what that looks like in just a minute. But let's just stick to the portfolio here. So the first thing you can see is it's all on one page, which we have been told by many executives would be a big, big breakthrough in their organizations. To even know what was there all on the same page would be great. We've also got the ability to take snapshots, which we think is valuable for the governance process. I want to go back in time and say, hey, what did we look like, last April? You can actually see how your portfolio evolves and changes over time, which we think has value for your corporate governance and your ability to, make decisions about where you are and where you really want to go to. The view here that you're seeing is what we call our standard view. So this is all the bubbles are the same size, just so we can kind of fit them on one page. But you can also look at them by opportunity size, should that interest you. And you can also look at them by how well they fit your strategic score. So just to keep in short-term memory, what we're trying to do here is met together the strategy that you're trying to pursue with what you're spending your money on, with what projects are getting the green light in your portfolio, with what people are working on and believe is going to get them ahead in their organizations. So to look at a specific project, you drop down to its bubble and click on it. And in this particular case, this is a compost solution for college dorms. And as you saw earlier, the way that you set it up looks like this. So the compost solution for college dorms, it's an active project. It's externally facing. We think it's a $50 million opportunity. We may be completely barking mad, but that's what we think at the moment. And here's why we think it's so big. It's a lot of waste gets created by college students in their dorm rooms. And we're willing to spend $250,000 to see if it's a real thing or not. That's kind of our exploratory R&D money. And here's the team of people that's currently working on this thing. Now you'll notice it's a small team. We're not talking hundreds of people. And with a brand new venture, that's what we recommend you really focus on. To place the bubble where it is, we fill out these uncertainties, as I showed you earlier with our hypothetical project. Now, these uncertainties are based on my research, which has looked over the years at what are the things that venture teams either left out or didn't look at or were surprised by as they tried to get their products or services or new ideas into the marketplace. So there's a list right now of 43 of them. And right now, these are standard. We're working on a version of the system where they're going to be more variable. But right now, these are just standard. These are like, hey, they come into my research. I just left them that way. And what you'll see is they can be ranked highly uncertain, moderately uncertain, or highly certain. And when we first create a project, what we assume in SparcHub is that it's all highly uncertain. You don't know what you're doing. So if you want to score it anything other than highly uncertain, my recommendation to you as managers and leaders is that you ask people to explain why. So let's take this uncertainty. It's endorsement by opinion leaders relevant to your business. And there's a little comment bubble, and you'll see that's filled in. That means somebody has put in a reason why they changed the score. And if you open it up, you can read the reason. We've got a great op-ed in the student newspaper, and it's got a URL. So now anybody who has access to the system can kind of peek in and see what the project team was thinking when they said, hey, we got this in terms of public opinion, right? And if you click on it, it'll even take you to the article that the team was referencing. Now, the reason we think that has value is that project teams, are kind of variable things. People come, people go. Over the life of a 2 or 3 year project, the team, could have a lot of new members. And we think this is a great way of just capturing what people were thinking and why they were thinking it. This is also super useful in making the distinction between intelligent failures, where, yeah, we all thought fill in blank, right? we all thought 2020 was going to be an awesome year for travel, and then COVID happened. Well, okay, that was not something that could have been foreseen. Nobody should be blamed for having thought that. So you'll see as you scroll through this list that any comment that's got any variable that's rated anything other than highly uncertain has some kind of comment next to it. And usually those comments have annotations or a link to something that allows you to see what the people were thinking when they were doing this. The checkpoints is really the heart and soul of this system, because what a checkpoint is it's a moment at which you're going to learn something. So the premise of this whole process is you start with what does success look like in the future? And then you work your way backward into what would have to be true for today. And then you break your big monolithic planning process down into these checkpoints, where a checkpoint is a series of learning events. And these are completely and totally customizable. So what's a good set of checkpoints for, pollution remediation firm is going to be a different set of checkpoints than for a firm that maybe has some kind of composting to do or something. So the first thing I'll point out is you'll see here is our $250,000 exploratory budget. That's the budget that we said we would be willing to allocate to figure out if this $50 million opportunity is a real thing or not. And we've allocated 37,000 of this to these checkpoints. And you'll see that there are a number. Some of them are active, some of them are not. If they're not active, you can hide them. You can just say, I'm looking at these right now. So these are only the active ones. And you'll see that I've allocated budget to a number of different ones, right? So here's a beta test of an initial college campus. And if I open it up and take a look at it, what I can see now is what are the assumptions that I'm willing to test. So you'll see a note here, Rider College has agreed to be a beta test for our prototype. We're hoping to do it by the summer term. And the two assumptions we're testing are we'll be able to get this to work on a real campus, and the dean will endorse us working with the cafeteria. And so anybody in the system who has access to the system can now see, okay, we've allocated 15,000 to the budget for this initial campus beta. We've got clearly identified the assumptions that we want to test, so specific assumptions tested. We also have a link here to what we call our document repository. And a document repository is just a place where you keep your actual documentation, because this system isn't really designed to like store text documents. So this would be your box, your Dropbox, your Google Drive, wherever it is, your Microsoft Teams, and you can just put the URL in there and you can go backwards and forwards between the two systems. But this tells you what we're learning and why we're learning it and what's going on. And to add a new assumption is super easy. You just click here. You can say, so we can say we can do this in all college semesters, right? So are we limited by when the students are on campus, or can we do it year round? That might be an assumption. We save our changes. And now if you open it up again, you'll see that assumption's now there. And you also can make comments on assumptions. So you can go in and put in notes. So that's a note. In last May, I was thinking summer term would have started by then. You can put in target dates, and you got an audit log now, which keeps track of when you spent your money and what assumptions you tested for that. So that is the checkpoint module. And we think its power is that it really helps you be very explicit about what are we learning and when. And one of the biggest problems with innovation is the metrics are different than in a conventional business. But what this allows you to do is say, hey, the team has gotten through 3 checkpoints. They did it fast, they did it cheaply, and here are all the assumptions that they tested. So here's other dead ends we don't need to pursue, or here's our learning, right? We're learning very quickly. Now we also have a place to store ideas. So these are the things that, somebody didn't want to forget about them, but they're not really ready to put a team on it or make it anybody's full-time job. But it's a place to kind of keep things that you're sort of mulling over. So I'll look at this one. This is an autonomous robot dog walking service. Currently it's inactive, so we're not actually working on it. But if we were to open it up, what it would tell you is, here's the idea. Instead of having to use humans, we're going to have robots, and you can score the idea in terms of strategy. So what you can do now is use this as a way of reminding people, hey, remember we said we were doing robotics, we're not doing AI? And you come up with this AI thing, well, either we've got to change our strategy or we need to not do that idea. And in terms of the whole idea inventory, you can look at all the ideas by keyword. So if you wanted to look at all the ideas relevant to dogs, this would pull them up. If you want to sort them, you can sort them by strategic score. So the highest scoring one comes up first. And you can sort them just by the idea name. Now, if you decide that this thing is actually something you want to take and put a team on and make it part of your larger opportunity set, you click here on these 3 dots and you convert it to an opportunity. It then takes this basic material, brings you to the idea page in the broader portfolio space. So it now would go on to this view and it becomes an idea that you're now actively working on. The permission set that I'm in this current instance of the system with is called the company administrator. And company administrators get to do a few things that ordinary users don't get to do. They get to create users. So you'll see I've got a bunch of users in my system with different roles for different kinds of users. They get to set up the strategic alignment scores. And you'll see here are those scores that I set up. They can edit them, they can add them. As your strategy evolves, you may want to make differences and changes. We can establish stages. So some companies like to use that. So idea, explore, test, validate, launch would be very typical ones. And if you're the kind of company where certain criteria have to be met for any idea to be useful at all, you can set up your default checkpoints. So any project that anybody starts will have certain checkpoints already established in them. So you can do that as a company administrator. So lastly, we have what I call a God view, which is the summary of all of the information that's in the system. We're still working on refining this, but basically it says you've got 30 open ideas, you've got 16 active opportunities. The potential value of this thing is huge. Here's our budget that we're spending and here's how we're managing it. And we have ways that you can export this information and use it for reporting and one thing and another. So that in a nutshell is the SparcHub system. So just to recap what the SparcHub system does is it allows you to look at your whole portfolio and how it's established. It allows you to take snapshots so you can go back in time and see where you were. It allows you to tell how much of your resource is being directed internally versus externally. It lets you map project details. It lets you score uncertainties for projects so that you can tell what people are learning. It also lets you establish checkpoints, which can be completely customized to the needs of your organization. And it allows you to connect what you're doing project-wise with your strategic scores. So how well does this project fit some predetermined level of what you're doing? It also gives you a way to capture ideas really quickly, and you can take the best of them. And if you decide you like them enough and you want to put some effort into them, you can turn them into opportunities very, very easily. So I hope you've enjoyed this demonstration and overview of the SparcHub system. We are in the process of rolling it out in several different varieties, and we'd absolutely love to hear from you if you have an interest in learning more or becoming a new member of our community. You can see the link below for how to get in touch with us. Thank you so much.